On July 17th, Reliance Industries issued rate revisions that force every Indian buyer to recalculate their procurement strategy for the remainder of the month. According to data from Polymer Bazaar, rates for high-density polyethylene, LD, and deemed export polypropylene have dropped by 4 to 6 rupees per kilogram. During the same period, domestic PP rates remained flat. But effective July 16th, Reliance withdrew price protection and EBI across these grades. Without that safety net, procurement managers must now decide whether to lock in these lower rates immediately or wait to see how the open bazaar reacts. Reacting too early risks buying at a premium if bazaar prices continue to slide, while delaying on tight grades could stall your production lines entirely. In this environment, a blanket procurement strategy will likely hurt your margins. Navigating July requires analyzing the supply and demand cycles for every grade independently. Indian polymer buyers currently face two distinct market environments based on their specific material requirements. The first profile is the strategic optimizer. This buyer deals in bulk polyethylene and has enough inventory flexibility to wait for the bazaar to establish a price floor. The second profile is the continuity procurer. This buyer needs specific polypropylene grades, or PVC, and must prioritize keeping factory lines running, regardless of daily price fluctuations. Confusing these two approaches is financially dangerous. Applying an optimizer's delay to a critical shortage grade leads to empty silos and halted production. Identify which of these two profiles fits your current production run before issuing your next purchase order. For the polyethylene market, RIL has dropped HDPE and LD prices by 4 rupees per kilogram. The open bazaar is expected to remain calm following this sudden drop, with overall demand cycles beginning to moderate. Buyers here face a specific trade-off: securing the new, lower baseline now, or risking inventory devaluation if the open bazaar drives rates even lower in the coming days. Since price protection has been withdrawn, you will absorb the entire loss if you buy now and prices continue to fall. The recommended approach for PE is to wait and watch. Procurement should remain paused until the open bazaar verifies a stable price floor. For these materials, maximizing your cost optimization requires the patience to let market gravity take effect before you commit capital. The polypropylene market is currently split. Deemed export rates have dropped by 6 rupees a kilo, while domestic rates have rolled over with no change. This chart shows how export-focused manufacturers have gained a sudden cost advantage on their raw materials. Meanwhile, domestic-focused buyers are dealing with flat pricing and must look for optimization through efficiency rather than material costs. Despite these pricing shifts, supply is the primary concern for specific grades like PP film, random, and copolymers, which remain in short supply. Improving global offers for the South Asian region are adding further pressure to these already constrained local supplies. Your export status dictates your price, but your specific grade requirements will dictate your actual buying urgency. In the PVC market, buyers are already preparing for widely expected price hikes. Waiting for the bazaar to react could be costly. If rates rise as expected, the delay will directly erode the profit margins on your upcoming production runs. Buyers needing PVC or constrained PP grades should move into active buying immediately. This means securing materials to ensure production continuity, even if you are paying a slight market premium today. For these materials, paying that premium is a lower financial risk than the cost of a halted production line. Navigating July without price protection requires a clear decision framework. Use this decision tree to route your next move. Start with one question: what is your exact procurement target today? If you are targeting PP film, copolymers, or PVC, your inventory levels are likely the primary concern. The mandatory action for this path is immediate active buying. This prioritizes the continuity procurer's goal of supply chain security over searching for the absolute lowest price. If your target is bulk high-density, linear low, or standard low-density polyethylene, your priority shifts to cost. The mandatory action here is to pause and wait for the open bazaar to settle. This serves the strategic optimizer's goal of maximizing savings by waiting out market volatility. The removal of price protection means the market will quickly punish those who apply the wrong strategy to their specific grade of polymer. Protecting your margins this month requires aligning your buy orders with the specific supply risk profile of each polymer grade.